IMF report on Ethiopia's defaulted Eurobond and the possibility of returning to bond markets. The script will explain what happened, what the IMF says, and what it means for Ethiopia's economy, clear, engaging, and easy to follow for a general audience. Ethiopia's default in the IMF report, Can Ethiopia Return to Bond Markets? Where we break down global issues shaping economies and lives. Today we're looking at Ethiopia's default on its Eurobond, the IMF's latest report, and what it means for the country's future. Can Ethiopia recover and return to the international bond market? Let's find out what happened. In December 2023, Ethiopia defaulted on its $1 billion Eurobond after failing to pay the interest due. A Eurobond is basically a loan Ethiopia borrowed from international investors. When the country defaulted, it damaged investor confidence and raised concerns about the country's debt sustainability. Why did Ethiopia default? There were several reasons. The impact of the two-year conflict in northern Ethiopia, which strained government finances, high inflation, and foreign exchange shortages, rising costs of imports, especially fuel and food, limited export earnings, and reduced foreign investment. Simply put, Ethiopia didn't have enough foreign currency to meet its bond obligations. IMF's role. The International Monetary Fund, IMF, has been closely monitoring Ethiopia's economy. In its recent report, the IMF highlighted that Ethiopia needs a comprehensive debt restructuring and significant financial support to stabilize its economy. The IMF also pointed out that without reforms, like improving revenue collection, controlling inflation, and managing foreign exchange, Ethiopia's debt will remain unsustainable. Return to bond markets. So the big question is, can Ethiopia return to international bond markets? The IMF report suggests it's possible, but not soon. Investors need to see stability and reforms before trusting Ethiopia again. The government is negotiating debt relief with official creditors under the G20 Common Framework, but private investors will take longer to come back. What Ethiopia needs to do. To regain credibility, Ethiopia needs to 1. Secure debt restructuring agreements with lenders. 2. Stabilize inflation and strengthen its currency. 3. Boost exports and attract foreign investment. 4. Restore political stability and investor confidence. Only then will bond investors consider lending to Ethiopia again impact on Ethiopians. For ordinary Ethiopians, bond defaults may sound distant, but they matter. A default makes borrowing harder and more expensive for the government. That can affect public spending, job creation, and the cost of imports. In short, until Ethiopia rebuilds trust, the economy will remain under pressure. So here's the truth. Ethiopia's bond default was a setback, but not the end of the road. With reforms, debt restructuring, and IMF support, Ethiopia can eventually return to bond markets. The key will be restoring confidence, both at home and abroad. If you found this breakdown helpful, don't forget to like, share, and subscribe to Family Vlogs. And tell me in the comments, do you think Ethiopia can recover quickly and regain investor trust?